Okay. Welcome everybody to Wall Street Reporter's next Super Stock live stream, May 5th. Back with us, we have Victory Square Technologies, VST on the CSC. We're going to be talking about some of these eye-popping numbers that they have, and based on these numbers, the stock should be $10, $18. We got to understand what the path is to get there. So for anybody that's brand new, just tuning in for the first time to our program, our goal is to bring you stocks which have that 10x to 100x upside potential. These are companies which are going after massive multi-billion-dollar opportunities. They have multiple catalysts in place which can drive that growth, and they're at a key inflection point. In the past, 12, 18 months, we've had already 7 stocks that are up between 1,000% and 5,000%. So 1,000, 1,200, 1,400, 1,700, 2,000%. We had a 50 bagger last time, and we have about a dozen stocks that are up, 200 to 500%. And we got to find out if maybe Victory Square could be our first 100 bagger stock. So Shafin, Vahid, guys, welcome back to the program.
Thanks for having us.
Thanks for having us.
Absolutely. I'm sure a lot of investors are very excited to have you guys. Okay, so the first thing is you got these eye-popping numbers that came out, 30 cents in earnings per share and like 20 million net income versus a loss last year was at 8.9. Okay, we got to explain these numbers, then we'll talk about all the exciting developments. So before we get to just for anybody new, can you explain what the business model of Victory Square in this kind of unicorn farm space?
Yeah, so Victory Square Technologies started in 2017, and the business model is to find some of the top entrepreneurs and tech companies from around the world, be the first check in, and we call it TKM, so we provide time, knowledge, and money, and work with these companies to grow and scale them and monetize them in this 36 to 48 month kind of time frame. So we've assembled 20 companies from so the top companies from around the world, so like India, Brazil, Europe, all over. And being a public company, we're audited, transparent, and liquid. We're giving retail investors from around the world ground floor access to these next generation of unicorn kind of companies, and the portfolio is very focused on blockchain, cloud computing, IoT, digital health, gaming, and augmented and virtual reality.
And also, I think for anybody that's new, they should also know that one of our big winners, which has been a 10x, a 10 bagger this year, before the market pullback since February, was Fans Unite, which was a spin out. It's one of your portfolio companies. And you have 20 potential Fans Unite in the hopper, so to speak, on the unicorn farm. They're growing, and they're going to be soon hatching.
23 and growing. Yeah, there's
23.
Yeah, they're again a number of companies similar to Fans Unite. You mentioned something in your intro about inflection, and again, those numbers kind of reflect the fact that 2020 was an inflection year. Fans was the first to hatch or harvest. Victory Square Health was the next, and this year we've got Game On, Immersive, and a number of others that are ready to harvest or hatch and start to unlock value for VST and our shareholders.
So it's interesting because Vahid brought on was it Game On and Immersive in the last couple of interviews. So those are going to be actually spinning out probably. We're going to talk about that later, but you're expecting those to come out this year in the next, I guess, few months, roughly, weeks or months.
In the case of Game On, I would say weeks. And
weeks.
With Immersive, I think we're scheduling for July right now. That's, again, there's so many things that are reliant on the exchange and the regulators, but we've got all our paperwork kind of based on that schedule.
I understand. Actually, one of the issues is that there's actually a backlog because of the whole. They're using this COVID thing. Like everything was with exchanges, between NASDAQ. Everybody has like backlogs with everything. It's pretty crazy. So, but the idea is to spin out those two, which I think we talked about this before. I think when you do those spin outs, when you start developing sort of like a pattern of spinning out these companies, these unicorn type deals, which become 10 baggers, I think the market's going to start, paying a real attention to Victory Square. So I want to get into, okay, enough with the foreplay. Let's talk about what is, you got this 30 cents earnings per share, right? I mean, explain how that happens and why is the stock not trading at, in theory, it should be $15 right now based on those numbers. Because if you have that type of growth, it could be, minimum $10, $15 realistically based on what's happening in the market right now with tech.
Yeah, I mean, I'll explain the numbers first. I think, again, referencing inflection point. So our business model is that we find some of these early seed stage top companies from around the world. We work with them, and then by the 36-month kind of time frame is when they're ready to kind of harvest and unlock value. So just taking a step back, in 2017, 2018, we onboarded or planted 13 to 15 seeds. So Fans Unite being one of them, there were a number of companies that kind of came into that portfolio at that period of time. And 2020 marked the 36-month time frame for some of those companies. So you saw two, kind of pop out last year. Fans being one, which has had a phenomenal kind of run and will continue to grow. Victory Square Health, which was another one, and that the unlock of that value showed up on our balance sheet. And so when people see those numbers, that 30 cents positive earnings per share or 19.7 million in net income, it didn't really surprise us internally because that's part of the kind of the plan strategically that we have. So we don't expect, that's not an anomaly to us. We expect it to be a pattern. And you referenced earlier, Game On, Immersive come out, and there's a couple of other companies that are being prepared. Covalent, which was another portfolio company, which did a different type of financing. But Copilot Advisor, which is another one we've mentioned before. So those numbers reflect an inflection point of the companies that have been planted in 17 and 18 starting to harvest. And on a go-forward basis, that is not an anomaly. That number will, based on our plan, should be a pattern.
Okay, but so the question, so this number, the let's call it 20 million, let's round it up, 20 million net income.
Yeah.
This is not cash income, but I mean, these are audited numbers because you have to explain how the accounting works so people can understand, and because they can understand how to value the VST.
Yeah, so there are a couple of interesting things in our accounting. So there's an accounting guideline, IFRS. So for us, we pick up expenses from the majority of our portfolio where we have a material holding. So that's in most cases, we are a material shareholder. So we pick up expenses on our balance sheet. But from a revenue perspective, we only pick up revenues and the proportion of revenues when we own, I believe it's over 50% of the company. So from a revenue perspective, it's not a true value of what the revenue of our ownership is amongst our portfolio. That 20 million number or that 19.7 million number, it's important for a couple of reasons, because when those numbers pop up, that is when our investments or certain investments are being deconsolidated. So our auditor is saying, okay, well, we valued it, at your investment cost, whether it was 2 years ago or 3 years ago, with no movement, in some cases of depreciation. But when it becomes deconsolidated, so when our ownership goes, I think it's below 20% or a number like that, it'll show the value of that asset, even though auditors still add a discount to that. But that number actually, in the case of Fans or in the case of some of our portfolio companies, it acts as cash. Because if we invest, if we put $1 into our portfolio, and when it's spun out, that dollar is worth 10, we can liquidate that $1 or $2 to bring cash back to reinvest and get another 10x to continue growth.
And you've been monetizing some of your investments. You had the warrant. You had a bunch of stuff you've monetized in recent months.
Oh, absolutely. I mean, in the case of Fans Unite, we had reached a significant return. We believe long term in that, but to be able to take some money off the table to reinvest in other opportunities that we see, so to continue to plant seeds that could be 10, 20, 30 baggers, like we're seeing a lot of disruptive things at this time. So whether it was, taking some of our position off of the table on the Fans Unite side, or, Argo, which was, something that had been sitting, warrants that had been sitting in the, with VST for some time, for work that had been done, unlocking an extra $1 million there that can be reinvested to again compound that growth. So that net income number is important because it allows us to create liquidity from that and to self finance new opportunities and growth.
Okay, so here's something very interesting. Okay, so Vahid, before the live stream, we were just talking about there's you have a thing behind you, the screenshot. We got to see this because so this is somebody. Vahid, can you explain what that is? Like somebody understands that?
Yeah, so we're super grateful for the shareholders that we have, and what we ask our IR team to send us any graphics, any short clip that it comes out in any of the forums or being sent to us.
Yeah, the investors are always creating these things. I know a lot of investors are always creating
my backgrounds and in my office. So we got this one a while ago, and it really resonated with us, and we really like the design. So yeah, I mean it's the tip of the iceberg.
Exactly. So basically, but I think that's kind of the theme of the stock right now is that, people see this like 80-cent stock, but realistically, the value that's under the surface could be, 10x, 20x, 30x that. I mean, because we're seeing based on these numbers. Now, again, you have to throw out these numbers because these are like because of, the auditing standards, the accounting rules, you have to have, I mean, that's what it is. I mean, you're following the accounting guidelines. But okay. So I guess.
Sorry, Jack, just to add to something that Shaf said around the numbers. So the accounting guidelines, it's a little bit against our business model from the number perspective. So what is not in these numbers, these numbers are not reflecting, is two things. As Shaf mentioned, the revenue for the company that we own less than 50%, it doesn't reflect in our numbers. The second thing, when you look at the asset line, it only shows the asset that we don't have the control by the definition of the guidelines. That is either we're less than 20%, no board seat. So we have, some of our companies that actually their value is high, Hydrate, Copilot, they're immersive, even Game On. They're not into these numbers because they are over 20% ownership. And we don't recognize that in our balance sheet. So the numbers that you see is not even the entire portfolio. It's just basically what it falls under the guideline based on the accounting guideline that is happening. And when, as a team, we'll look at this, I was watching an interview from Jeff Bezos that he was saying, if your stock goes up by 10%, doesn't mean that you're smarter by 10%. Or if it goes down, it means that you were smarter by 10% yesterday. The numbers doesn't reflect what the company does on day-to-day basis. What the numbers that you see, it's the plan and the fundamental and the framework that the company put together from 3, 4, 5, even 6 quarters before. So we were expecting these numbers to come, and we have the same plan moving forward based on the plan that we have for any of the portfolio companies. The next generation of the cohorts that right now we're very heavily looking into them and investing in them. So just to add to that, we're expecting to see these numbers based on the original plan that we had for the company from a year and a half and year ago, and this continues onwards based on, again, the different pieces of the puzzle that we're trying to put together.
So in other words, really, like investors, what they're seeing now, I mean, this is basically just, the stuff that was, planted, several years ago. And so they're not even, what people don't really even understand, what, the things that you're investing in right now. Because, I mean, again, this cohort you're putting in right now, and we'll talk about some of the investments you're looking at, some of the new deals. You just, I think you did the solar company. So there's a lot of stuff that, it's interesting. I think one of the issues with the market is that investors don't quite understand the whole story, the concept. So that's why the stock is kind of undervalued based on that. And I think if they did understand, you might be trading at $3, like Anthony says, or higher. It's like, I guess the question is, back to the introduction we had where I said, hey, again, our audience right now, Vahid, and you're responsible for it partially, is, they're spoiled. They're looking for these 10 baggers. They had fans that was a 10x. They got others, with the stock that was a 50x a few months ago. So they're looking for that 10x. So can you guys explain what needs to happen? What needs to happen for Victory Square to be, let's call it a $10 stock, which is not even high. It's not even a high number. I mean, what would need to happen to get there?
So it's, again, like putting any number on the stock price. I mean, we're not at the position to define this is going to be our stock price. This is what
the valuation. Do you have how many shares out, like fully diluted as of today? You have
over 92 million shares is out there. I believe from the Victory Square right now. And so we go back to the fundamentals. Like we define the fundamentals of how the business. We're trying to create a machine, a factory that is based on the fundamentals. It's scalable, it's process oriented. What are the issues that we're looking at to find companies? What is the next generation of tech or industries that we feel, based on the customer's behavior or based on where the audience and the companies and the businesses and the customers, their habits in moving forward, what are the other industries that is going to be hot, to be ready for it? What it takes in place in that 12 to 24 or 36 months that we're working with these companies. What are the things, what are the matrix that they need to hit in order to get to the point that if the company, by the time that the wave comes for that industry, we're ahead of the game, and what needs to be done in the market. Now, if we build this fundamental criteria and framework, it's going to be like a machine. And again, we're focusing in our game to make sure what we do is the best that we do for our investors. What we promise them is what we're going to be delivered. And we'll always have access to those top-notch companies in those industries. And what are the secret sauce that we need to have in order to get them to that scalable size of the business to move on. Beside that is going to be how we can bring more eyeballs to the Victory Square. So we've been super fortunate that we have amazing shareholders around us. They create a great community. The word being is spreading around, but the company also has responsibility to start, having a better story to go out, having this story over and over, introducing it to more people. Because again, being a public company, one of the advantages is it's borderless. You can have your shareholders, your customers can be anywhere in the world. So it's just about retuning the story and make sure the story is being explained well, and we have the right audience for that. But focusing on the fundamentals, we believe in the company that is going to continue growing. And again, we're doing our best to bring the best for the investors.
Yeah, I mean, the valuation is only 70 million right now for VST. That's Canadian 70 million. So it's like, what is it, 55, 60 million US. And for the whole, that's for the whole unicorn farm. That includes, the stuff that's already trading in the market. So there's really, there's a real kind of discrepancy, and which presents a big upside. So it kind of plays into that graphic behind you, which the investor sent, which is people kind of see just the tiny sliver.
Yeah, just a note though, I think for us the most important thing, to Vahid's point, is that the internal business metrics continue to get better quarter after quarter. So again, I hate name dropping, but Vahid was mentioning Jeff Bezos. There's a quote that he has where he says, in the short run, the stock market is a voting machine. In the long run, it's a waiting machine. So what you need to do is operate your company in such a way that it'll be weighted one day, and just let it be weighed. So as long as internal business metrics continue to grow and we continue to share the story, the share price will eventually be weighted to what its true value is. And so today is a great buying opportunity. It's a great entry point for investors. So it's not too late for them to get on the train.
Okay, so let's go to some some audience questions here to get an update on the unicorns. Should we talk about maybe I guess which ones contributed most to those numbers, the 20 million net income that you show? Which of the baby unicorns? I guess they're teenage unicorns by then if they're contributing that much.
Well, for 2020, and just a shout out to, I saw that question, Rebel Collective built an amazing Discord channel, really, really good VST supporter. So last year, it was predominantly Fans Unite and Victory Square Health, because like Veed was mentioning, our ownership in those businesses changed so that value kind of showed up on the balance sheet. So there's only really two reflective of only kind of two companies, and then a discount of what the true value was. Because again, that's how the auditors work. On a go-forward basis, though, what to expect next? I mean, Game On and Immersive have already been communicated in. Hopefully at some point this year, our ownership will go below a certain value so that ownership shows up. But you've also got Covalent, which is a portfolio company of ours that has been absolutely crushing it there in the blockchain space. He mentioned Copilot Advisor. So Copilot, you've heard us reference this triple, double, double. This company is, I think, on track at the end of the year for over 20 million ARR. So again, came into the portfolio in 2018. So Hydrate, he mentioned, again, in the digital health space, I think you'll be hearing about some tremendous things happening. So last year, I think it was predominantly Fans United and Victory Square Health. This year, you're going to see, in addition to those two companies, you'll see Covalent, Hydrate, Copilot, Game On, Immersive, and then there's a number of other seeds that got planted, last year and this year that you'll hear about in 2022 and onwards. So there's a lot of catalysts that are going to continue to keep this, these numbers going in the right direction and the story going in the right direction.
Okay, so I think also the takeaway is that this is like a constant process. This is not like just you're not like sitting back based on the portfolio companies from the past or whatever. You're constantly it's a constantly moving machine. It's like a flywheel. Like as you monetize, you're putting that money into new opportunities, and those as you monetize those. So it's actually going to start. I think we're actually going to start seeing the compounding effect start to happen now this year, because you're going to have 5 of these deals, or is it 4 or 5 of these?
Oh, absolutely. And we wrote a letter to shareholders last year where we specifically talked about the VST flywheel effect. Like last year was an inflection point. It wasn't surprising to us that's a 36-month mark for a lot of those companies that we were seeing. And so that net income and that earnings per share and the liquidity opportunities it creates for us to replant new seeds and spin out others that are kind of maturing along that schedule. Last year there was 2. This year there's probably going to be 5, and next year again that compounded growth will continue, because every company that gets spun out unlocks more value that is an asset or creates liquidity that then can be reinvested. And again, this is not a short-term business. We're looking long-term. We're not looking to, we ourselves, the share price today isn't as concerning to us because we're not selling stock. We're building and selling companies, and that value that comes back when we see that significant growth allows us to continue to compound that growth. So yeah, this will continue.
Okay, so I got a question. So will Covalent be reevaluated in Q1 after the last financing that they announced?
So just give you kind of like a perspective on our financial, how it goes out. So Q1, Q2, Q3 mostly is the management review. Sometimes we do the balance sheet review by the auditors. At every quarter, we reevaluate the companies, and we get a third-party company to actually reevaluate them. So for Covalent, it's going to be mostly Q2 as far as like the biggest jump, but it's going to be Q1. It will be to the extent, and then Q2 is going to be reevaluated. And sometimes we send it to the auditors and we send it to the third-party evaluator companies to make sure like we're on the right track. And sometimes that's their decision to define if it's going to be reevaluated on Q1 or Q2. But all the numbers will be revisited at the Q1 at the end of the quarter for Q1 numbers. Okay.
Question: when do you see Game On being listed? When is this going to start trading?
So I'd like to give a quick update on Game On and dividend on Game On. So Game On, we're on track. So as you said, there was like a few challenges. One, from the regulatory perspective, from CSC and BCSC, they're experiencing a very high volume of the applications, and because of the COVID, things are so slower. we're on track, and everything has, we got to the last comment letter that in the very last minute, another document were asked from us. That was something around the financial that should have gone through the audit again for another entity. That we've gone through that is already, it's already done. So for us, we're expecting to get the receipt in weeks. I would say there's nothing else left on our side to complete. From the dividend perspective, has already been done. The board has already approved that. But VST, as a public traded company, we cannot give dividend private company shares to our shareholders. Game On, as of today, is a private company until we get the receipt from the BCSC on the prospectus that they count as a public traded company, and then we'll have access to the, to the financing money and everything else. As soon as that receipt is issued, then we're gonna also issue the dividend shares to our shareholders as well. But technically, right now, Game On is a private company until we get that receipt, and we won't be able to give any dividends. So that goes back to the timing of that. In the next few weeks, when we get the receipt from BCSC, then we're going to issue the dividend, and we're going to announce the details of the dividend to our.
So just to be sure, we are giving a Game On dividend. It's just going to happen once it gets received in public. Because we can't issue in advance. So we are giving a Game On.
And we're looking the similar case. Again, we're going to have some announcement on that. We're looking at the similar case for Immersive as well. But that's a bit too early right now as we're going through the process of, the listing process, prospectus, and all that. But Game On is 100%. It's just we're waiting for the receipt to be able to issue that a release and issue the details to our shareholders.
Okay, and here's a very important question. How many shares of Game On will VST, for each share of VST you own, or what's going to be the ratio?
So again, all that detail is going to be up in listing and the reason for that is when you go through the prospectus, the cap table will change, based on some of the warrants, some of the options, some of the bonus percentages that has been defined based on the prospectus. So based on what we figure out at the end, what will be the percentage? We have a set percentage of the VST portion that was going to be distributed to our shareholders. All that will be announced as soon as we receive the receipt from the BCSC on our prospectus.
Okay, but is it going to be trading by May 31st? Do you think?
Again, it's based on what we've seen. It should be sooner, but again, I can't make any promises because again, it's in the ball in their courts. And again, when you go, it's not like a form to submit. It's sometimes subjective that is going to be back and forth with the regulatory bodies. Okay,
because I think what is it? I think somebody's asking because like the I guess part of the escrow is it has to be listed by May, and if it doesn't get listed, do you have to give the money back?
So again, we're confident. We probably won't issue. We're going to face with that issue. And that's the sub-receipt date that we have on the raise. That the money is with the escrow. And again, in the Game On case, we don't believe we're gonna have that issue because we're gonna be fine based on what we've seen so far and the communication that we have back and forth. But in general, if there's a sub-receipt financing, after that is going to be either it's going to be extended or the money has to be paid back to the investors. But in case of the Game On, we're not worried about that.
Okay. I guess this kind of question is, so the record date to get the dividend, that's going to be, you're going to know later. Basically.
So as soon as we receive the receipt from the BCSC and the final prospectus, then we're going to issue the shares and we're going to issue the release with all details.
Okay. Let's see, what else do we have? What are the questions? Okay, I guess people are asking, I think if I understand this question correctly, is are you going to be dividending out every time you do a spinoff?
That's the plan. I think, I'm a shareholder. I'm the largest shareholder. I don't want to sell my vehicle share. I want my share dividend in these spinouts. So that's the intention. Game On will be first. Immersive will be second, like we mentioned, and we intend to continue that. I mean, again, that's long term. The value proposition is that we want you, like you said, people are coming in for the appetizer. We want to stay for the main course, and there'll be endless. We want this to be like 23 courses. So we'll be, we intend for this to be, customary. When we spin out an asset, we pay a dividend out to our shareholders in the form of a share dividend.
Okay. Okay. So we got look at this. We have somebody who's just buying shares right now as we speak.
Go,
If
Takai.
we
Thank you
keep
for your
going in these
support.
directions. So this might be a little bit. We've had a couple of questions about uplisting. I mean, at some point, that's a little bit early right now, right? To talk about uplisting, or
No, it's been in the works. We've been there are certain criteria that are required for us to do it, but we've started that process of reaching out to uplist.
okay, we're talking about Nasdaq. Excuse me, you're talking about Nasdaq or TSX?
So the first step for us will be the TSX.
Yeah. Okay.
The Nasdaq, I think, will look a little bit farther out, but
Right,
the TSX would be the first step for us.
But for TSX, you would go for the full, not the TSXV, the full TSX, right?
I think based on their requirements, you may have to go to the V first, and then for a couple of months and then uplist. But yeah, no, I think for us, we've inquired about meeting the criteria for an uplist to the big board.
Okay, let's wrap up. We're running a little behind. I just want to maybe get a quick snapshot of, the next crop of unicorns. Like you made an announcement recently about the solar, the solar investment. Like, what do you have in the pipeline right now that's going to be hatching, 18 months out? What investments are you looking at making right now, which investors are going to see the fruits of those, next year, let's say?
Yeah, so the main focus though is to get Game On, Immersive, Copilot, Hydrate, all those companies right now that are kind of hitting their stride. But we made an announcement, and there's a big focus for us around the renewable space. So Stardust Solar was an announcement we made. Again, it was a founder that we'd worked with before. They've already got momentum. They've already built infrastructure and ecosystem. So now we're working with them to pour some rocket fuel on their business. There's some M&A opportunities there. Apart from that, there are a lot of things that we've been going deeper in the digital health space. So I think our investors should be prepared to see some releases that we've planted seeds before on other platforms, telehealth platforms around pets and mental health, and in the hospitality space, and that'll be announced and released soon. We've been really looking at the blockchain space, and the crypto space is something we've been in for years. And I don't know if a lot of people know that the first publicly traded blockchain company in 2015 actually came out of our labs, our R&D labs. So we've got a number of projects in the social token, creator token space. There's some projects, there's a marketplace in the NFT space that's working with artists right now. So there's some interesting projects that we've been working on for a bit of time, but haven't really kind of come to light, and they'll be coming to light over the next couple of weeks and months. There's one other thing too. So again, I don't know if a lot of people know that we have this not-for-profit incubator in BC called Launch Academy, where we bring in hundreds of companies from all over the world, and we get a first look at some of these best ideas, where we're officially launching a new cohort, an R&D lab, which will be bringing companies from Indonesia, Thailand, Singapore, India, in a couple of segments that we're looking at in June, July, and August. So there'll be some interesting announcements for companies that have already kind of applied to be part of that, which allows VST to look at what's next and to be able to see what's next from around the world. So there's a number of catalysts over the next couple of weeks, months, that are going to pay dividends this year and onwards.
Okay, it's very exciting. Okay, so let's kind of wrap up. Last thing is what else can we expect in terms of news flow? In the next 6 weeks or so.
I mean, I think one is Game On, the Game On listing, the Game On share dividend. There'll be updates on Immersive. Immersive's doing some really cool stuff, as is Game On. I think you're going to see a number of announcements around the digital health space. Vahid mentioned earlier, Hydrate has been performing really well, and there's some other things around that space that are coming to fruition that will be kind of communicated. Our Q1s come out, I think, May 30th. So again, that's going to be another thing to keep an eye out for. And then there are a couple of, I mentioned a couple of investments around the creator coin social token space and NFT space, that renewables, that are all kind of in queue right now. So those are things that, so again, number of catalysts that'll be communicated.
Okay, so could we expect some news related to these NFT investments in the next 6 weeks?
Absolutely.
Okay, because I mean that's kind of the hot thing right now. I mean, it might cool off in 6 weeks because these things are constantly between the blockchain, all the cryptos. There's always things coming and going. Let's see what. Here's an interesting question. Okay, so when does VST expect that its cash generating subsidiaries will provide the cash flow to make VST self-sustaining?
I like the Canuck logo there. So when we look at the net income for last year, that now allows us to tap into that, so we can self-finance and create liquidity from any of our companies that have been spun out, or in the case of earlier we sold some IP to another publicly traded company and took stock that's publicly tradable that we can liquidate and reinvest. So right now, if we want to be self-sufficient, we have already built ourselves.
You have $5 million in cash now, right?
We have just under $5 million cash. But we've also got cash equivalents that we can kind of liquidate as we see opportunities. So we, in theory, VST's always in theory kind of been, right now we are self-sufficient in that, our operating costs are very, very low. So our cash flow covers that. But our cash equivalents or our liquid assets right now, we have the ability to sell them as we see fit to take advantage of opportunities and be offensive.
What are your cash equivalents? Ballpark. I mean,
so right now I would say you're looking at close to $10 million of tradable investments that we can kind of liquidate and use to reinvest should we see fit. We also, again, have the opportunity, if we choose, to use stock as a currency, or like if people look at the SafeTest VSH transaction, we used equity in one of our private companies to grow. So we also we have a number of different creative ways to continue to go on the offense and not need to pause. So we've built kind of a self-sustaining machine.
Yeah, I mean, apparently, at this point, yeah, you can make a ton of. Essentially, you have $15 million of cash or equivalents to play with.
Yeah, and that'll grow with game on lists and immersive lists, right? So again, each time a company gets spun out, unlocks an asset that's publicly tradable that we can borrow against, sell. Like again, it's built up.
I mean, in theory, if I'm kind of doing the math here, based on kind of like the track record you've had with, let's say, fans, a couple of other deals, with what you have right now, with just based on your track record, you could turn this 20 million plus. I'm assuming you're going to be able to monetize another, let's say, 15 million plus. You're going to be able to monetize another, let's say, 20 million the next year. You could probably turn that into $1 billion of assets in the next 24 months, I would say. I mean, you might have a $1 billion plus valuation in about 24 months.
Our goal is to continue to roll over this. Like, we built the self-sustaining machine,
like the snowball, like a Warren Buffett.
No, it's the flywheel effect, though, right? Like the process started in 17. Those 15 companies at that time that were planted in 17, 18 are coming to fruition. That liquidity, off of the ROI on that, just gets refunneled in and replenished in, and every time dollars come out, we can keep cycling that. So the flywheel and that inflection point was last year. But to your point, yeah, that's the intention. The goal is to not stop. Like, we're now building, using infrastructure that we have to get access to a larger net of companies. Like I mentioned earlier, with that new R&D project that we have with Launch Academy, which has been in place, that is seeing hundreds of applicants from around the world that want funding or to come to Canada or access to some time and knowledge to help grow and scale their business. So no, this will not stop. We'll continue to compound this.
Okay, I mean, so basically the stock could be, if I'm kind of projecting the numbers a little bit, you could basically have a $12 stock in about 18, 24 months if you're able to kind of get the same ROIs on this 15 million plus that you've had in the past, and plus the other the rest that you'll be able to monetize. Is that realistic, do you think?
Yeah, I mean, I can tell you from a KPI perspective.
Vahid was smiling. Vahid was smiling about the 10
No,
$12. Vahid, is that realistic?
Well, I can tell you, to me, that's our intention has always been to build $1 billion company. You know, we didn't come in. We had tremendous success before and made tremendous money, and it's, you know, documented. People can Google us. Like we set forth to build $1 billion company. So the KPIs for the last 36 months show that we are building in that direction. The business, the flywheel and inflection point hit last year. Now we can continue to grow even more aggressively and self-sustain this, like you said, to continue pushing forward. So the KPIs, based on how tech companies are valued today, at some point will be weighted accordingly. And when that time comes, yeah, the valuation could be significant.
Okay, excellent. All right. On that note, I want to thank you guys, and we look forward to hearing more about the next exciting developments coming out of VST.
Thank you so much, and yeah, thank you all our share owners for the support. Exciting things to come.
Thanks, guys.
Thank you guys.